this working? Oh. Oops. Oh, this does work. How cool. Okay. Hello everyone. I will now be going through some managerial accounting. This is my first time live streaming like this, so oh, I don't know how this works. This is pretty cool. Okay. Yeah, let's just get straight into it. Oops. Okay, so I'll go through this question. I'm just studying for my exam since I have an exam soon. So here's like a mock exam that I will be going over. I'm also like pretty tired right now, but let's see. We have the sweet and salty company over here. So this one, I was going to make a video on it, but I'll just start over so we can go through it together. So we have the break-even point in sales, which is 490,000. So we know that 490,000 is equal to our fixed cost divided by our CMR, which in this case is 0.3. So then what we can do is find our fixed cost, which is equal to 490,000 times 0.3, which gets you to 147,000. So then we also know that our operating income is 32,000, right? So if 32,000 is our operating income, we know that that is our revenue minus our variable cost minus our fixed cost of 147,000. So then we can add both sides, the numbers. So then we get 179,000 is equal to our revenue minus our variable cost. So from here, we know that our revenue minus our variable cost is our contribution margin. So basically 179,000 times 0.3 would equal our no. Where was I going with this? Oh, there are people. Sorry, yeah. I'm just doing some accounting. But anyways, like I was saying, so we know that 179,000 is equal to our revenue minus our variable cost. So to find our actual sales revenue, what we would need to do is then we know that 179,000 times our, well, that is equal to our contribution margin. So basically like 0.3 times what is equal to 179,000. So what you can do then is divide both sides by 0.3, and your actual sales revenue is equal to 596,666.6, which is equal to A. So that's the answer to 17. And then here we have another question. When a company produces 10,000 units, the average cost per unit is $20 and total variable cost. So we need to find the average cost per unit at a volume of 12,000 units. So let's copy this over and solve this out. Okay, so at 10K units, the cost per unit is $20. And then total variable cost is 180K at 20,000 units. A linear cost function, so it'll follow y equals mx plus b. Okay, so here we know that our variable cost is equal to $20. And then here our variable cost would be our 180,000 divided by 20,000, which is equal to 9. So it's $9 per unit. Oh, bro. Okay, wait. Average cost per unit, so that's including your fixed cost and your variable cost. And if our variable cost is equal to 9, then 20 minus 9 is equal to 18, making our fixed cost 18. So oh, well, actually our fixed cost would not be 18, it would be 18,000. Company is producing 10,000 units at an average cost per unit is $20. So that means our variable cost plus our fixed cost per unit is equal to 20. Total variable costs are 180K at 20,000 units. That means if you divide that 180,000 divided by 20,000, you get $9 as your variable cost. And variable cost will always stay constant, so you will have so 20 times 10,000, right? Is equal to your 200K, which is equal to 10,000 times 9 plus whatever it is, so 90,000. 110,000 in fixed costs. So at a volume of 12,000 units, we can do 12 times 9, so 108,000 plus 110,000, so 218,000. Divide that by 12 would get you 18.17. So the answer is D. Okay, I don't think I explained that quite well, but let me now go through it. Ooh. What is this? Okay, so to explain this question, when a company produces 10,000 units, the average cost per unit is $20. That means your fixed cost plus your variable cost per unit is equal to $20. And then we know we can find our variable cost because we see that 180k divided by 20k is equal to 9. So our variable cost is $9. So plugging that back in, you have 9 times your 10,000 units, which is equal to 90k, plus whatever your fixed cost is. And then, well, divide all that by 10,000 should get you to 20. So then 20 times 10,000 is 200k. Yeah, so then fixed cost is equal to 200 minus 90k, which is equal to 110k. So what we can now do to find the average cost per unit at a volume of 12,000 units is do our total cost is equal to 9 times 12k plus 110k, which is equal to, so 9 times 12 is 108, so 108 plus 110k is equal to 218k. Now if you do that, if you do 218k divided by 12k, you end up with 18.16 repeating, which is D. And that's your answer. I wonder if volume is on. Does this work?
I was going to.
Oh, perfect. Okay. So now the next question is, how many of the following statements are not true regarding the decision-making process? For a special order, whether we have excess capacity is irrelevant because we can always utilize additional machinery. That doesn't sound very right. Managerial accounting primary's role for decision making is to determine what is. Okay, that one is right. Opportunity costs are relevant and sunk costs are irrelevant. That is true. Qualitative consideration should be ignored. I think that's true. So I think the answer is 1, but I'm not sure. Is 19B. No, it says that 19 is C, which is 2. I think this one is wrong. And then, well, these two are definitely true. For decision making, managerial accounting, do you consider qualitative factors? Oh, so that is not true. So you should also. What are qualitative considerations? It's Rochester is a contracting company that installs wheelchair accessible ramps at commercial sites. For a normal quarter, the company expects to install 200 units. The company is requested to fulfill a special order. To fulfill the special order, they need to take on a one-time fixed cost of $1,600, but otherwise has the capacity. Because of the nature, $25 of variable overhead will also be saved. If the rehab needs 4 ramps installed, what is the minimum total price? So they expect to sell 200 units. Okay, so that we can ignore. Variable overhead, direct materials. So 700 plus 200 plus 75. But then you can also save 25, which is then 7, 8, 9, 950 times 4 plus 1,600. I got A for 20. Let's see if 20 is A. 20 is A. Okay, perfect. That was a fun one. I'll explain that one. Let's go ahead and move this over. So. So we're trying to find the minimum total price. And so when we're trying to find that, we want to ignore fixed costs because you're going to have to pay that regardless. So we want to identify the relevant information. In this case, this is relevant because that's different. This one is also relevant. So what we can do is add, what is this? Add this, this, and this, and this. Why is you? Okay. Let's do this. So it's just 700 plus 200 plus 75, but then you save 25 bucks per unit, so that. And that is equal to, so 700 plus 200 is 900 plus 50, so you have 950. But then you also want, you need 4 of them, so 950 times 4. 30,800, and then you want to add your fixed cost of 1,600, and you get 5,400, and that is the total minimum price that they should charge to break even. Easy? Yes.